Hello, everyone, and welcome to lesson 4 of our lesson series, which is entitled Execution and Psychology: How to Trade with Confidence and Control. You see, when placing a trade, it is easy to place a trade, but doing it with calm, confidence, and discipline is what makes a true trader. And in this lesson, we will focus on how to execute trades without hesitation and master your mindset. Now, when it comes to trading like this, the real game is your mental emotion. Your biggest opponent in trading isn't the market. You hear situation where people say the market is targeting me. No, the market cannot target you because millions of people are in the market. So the market cannot just leave everybody and just be focusing on just you. What is really against you? What is your opponent? Is your emotion. And if you can master that mindset of yours, then you'll master the game. Now, the first step that you can use in mastering this your emotion is to stick to your plan. Yes, sticking to your plan, no impulse trade. And how can you do this? Well, from our previous lesson, we've already seen everything we take into consideration before placing a trade, before placing our take profit, before placing our stop loss. Now, it's just for you to combine all of these things together and stick to it. The first thing you want to do is to only trade when your strategy checklist is met. What is your strategy checklist? The first thing we mentioned is that you use the 200 EMA to confirm your trend direction. So that's your trade that you want to take now. Is it according to the trend direction? If you say yes, well, that is one. The second one you want to look out for is it at the price? Is the price at the key zone? That is whether your support level or your resistance level, depending on the kind of signal you're looking for. The current price of the market, is it at that your key zone? That's the second thing you want to look out for. The third one is as a valid candle confirmation form. All those confirmation that we mentioned earlier, the bullish, the bearish engulfing bar, the bullish engulfing bar, the three white soldier, the three black crowd, all those things, did any of them form at that key zone? That is the third one. Then you will now mark out um strategy measurements using the short or long measuring tools. Excuse me. Using the short or long measuring tools. Then you check out your stop loss and your take profit. Put them in place. Now, if all of this has been met, then all you need to do is you take your trades. You don't think too long. No, just take your trade. Now, in this write-up that is written here, you can see where I wrote you use the 1 hour chart for fewer. Well, let me just make a quick correction on that because you can use your 15 minutes. All right, so I've corrected that. As you can see here, we're using the 15 minutes time, and the reason why we use this 15 minutes for your entries is in order to avoid over trading. Yes, if you are using something like a 1 minute, 5 minutes, you will be able to see plenty setups and there will be plenty false setup. But it is very good if you just see setup like two or one safe per day. You will know that you are taking fewer trade, you are not exposing your account to too much risk, and by doing this you will be able to scale up gradually. So if all these checklists that we mentioned earlier are not met, you don't take the signal. You just be patient, and there is a power in being patient in forex. That's very important. You need to learn patience. So don't over trade. Time your entries. 15 minutes chart is very okay in order for you to see fewer but reliable setup, and you can just limit yourself to one or two quality trade per day and be disciplined with that. Now, another thing you want to look out for is the step 3 that talks about your detaching yourself from the outcome. Yes, whenever we take a trade, it is normal for us to feel that we want this trade to hit our take profit. But if you have that feeling every time, you are now trading with emotion, and this might affect the way you allow your trade to run. Yes, you want to detach yourself from that outcome. When you place your trade, just walk away. Or you can even be monitoring the trade once in a while calmly. Your monitoring the trade does not mean that you have something you want to do on the trade. Maybe the only thing you want to do on the trade is if you are targeting, for example, maybe times 2, As soon as you see times 1, you can set a break even. Well, that's fine. But you don't want to be shifting your stop loss unnecessarily or taking your profit halfway wherever you are doing. No, just accept the results. Either it is a win or a loss. Yes, for you to have followed your strategy alone, that means that it was a win for you. You followed the plan, and no matter the outcome, that's a win already. And if you continue following the plan, just as we mentioned in our previous lesson, at the end of the day, you will end up with massive profit. So it is very important for you to detach yourself from the outcome. When you trade, don't be too emotional about it. Don't feel, this trade has gone 70 pips, I'm targeting 100 pips, and now it has gone 70 pips, now it has come back to 20 pips, now it has gone to 60 pips. Is it not for me to just take this profit and run away? No, just stick to your trading plan, because if you keep running away like that, you keep taking profit halfway, you keep taking your loss halfway, eventually you will see that your account, you are not following your plan, and your account will be messed up. In fact, you might blow the account earlier than usual. Now, what are the bonus mindset tips that we have here? The first one is, don't chase a missed trade. Yes, for example, you might come on the chart and you wake up after coming up on the chart and you see that you've missed an entry. Maybe, for example, a trade has already formed a bullish engulfing bar, and okay, let me take this one on this side of my chart. For example, this trade, let's say it has already come here and I was supposed to enter for a buy here, but when I saw the chart, it was already here. Now, don't say you want to take the trade at this point, because when you take the trade at this point, your stop loss now, you might not be able to bring it to this level because it will be too far, and you want to bring your stop loss to somewhere close. There's possibility that the trade might actually retrace, hit your stop loss before going up. So you don't want to chase you don't want to chase after missed trades. Just let them go. The second thing you don't want to do is, you don't want to revenge trade losses. For example, remember, according to the previous lesson, we talk about risking 2% of your account, meaning you might need to lose up to 50 times before your account is entirely gone. Now, let's say you've lost 10 times on a row. It is normal for you to want to be like, I want to cover back. I want to cover all these losses. I want to make what I lost, I want to make it back. No, don't do that. In fact, doing that can make you lose your account faster than you think. So you want to avoid that. Then the last thing you want to do is, you always want to journal every trade you take. Yes, what you did, how you felt, and what you've learned after taking that trade. You want to journal it down. Let's say I take a trade this morning and it eventually hit my take profit. Now I want to write it down. Before I take this trade, how was I feeling? How was my confidence rate? Now, when the trade started going in my favor, how did I feel? Did it give me a drawdown? When it was giving me the drawdown, how did I feel? Now, eventually, what was the result? And what have I learned from the trade? If it was a loss too, I also want to do the same thing, because when this thing I'm saying now might look as if, is it really necessary? But when you've been able to journal your every trade, maybe for the past 1 month, and you go back to checking the book, like me, I do that, and you go back to checking that your journal, and you check your progress, your results, your everything, it will shape how you are going to take your trades in the future, and it will always have a positive impact on your trade. Now, for a quick recap, what have we discussed in this video? The first thing is, you want to follow your rules, not your feelings. Your rules has already been checked, and you've seen that yes, if you follow this rule, your account will eventually end in profit overall. You've not checkmate your feelings. So your feelings is not what work in the forex market. No, it's just like doing maths. When you are given a maths question, it is the formula you use that will give you the answer, not your instinct. You cannot just be guessing answer and you feel you get it. No, you have to follow the rules. The second one is, you want to be selective with your trade. Yes, you don't want to just be trading 1 minute, 2 minutes, 5 minutes candle time frame, and just be trading like in a day you take up to 8 setups in this kind of strategy. No, you just want to be selective. Take a higher time frame. For me, I recommend 15 minutes or 1 hour, so that you can take maybe 1 or 2 trades in a day. Sometimes you might not even see a trade in a day. You let it slide, so that you can be able to filter out the best strategy. The best setup. Then thirdly, you want to focus on the process, not just profit. So let's say you are trading a demo account, for example. You've taken the first trade, you lost. You've taken the second trade, you lost. You take the third trade, you lost. The idea is you don't want to see it like you are losing. No, you are following your plan. So it is your plan that has failed. So maybe after a month, you can now go back to your journal and check, okay, what are the things you feel you are doing wrong, and what are the things you can actually improve on using the same strategy. Because most times it's not just the strategy that is the problem, it might be your trading plan. So it's only a newbie that will be changing strategy up and down. No, when you stick like this strategy I'm teaching in this lesson series, it's a proven strategy that has been working over time. So there might not be anything wrong with your strategy. It might just be your trading plan that you need to work on. So that's just it. Now, okay, let me just expatiate more on that. For example, there's a strategy I've been using recently, and I posted it on YouTube. So if you've not checked it out, just go check it out on YouTube. The name of the strategy is a mobile strategy whereby you set an indicator, the envelope indicator, and I use that on my MT4 and MT5 account for scalping. Now, initially I started catching bigger pips like 100 pips, 70 something pips, and I just do it quickly, like just to grow my account. But there was a particular pattern I was using on the $1 account, and I observed that over time I might eventually blow the account. Now, not because the strategy is bad, but because the risk management, the risk to reward ratio I'm using is too big. I might be risking 20 and I'm targeting times 7, times 8. So what I did is I now reduce it to targeting just times 3 or times 2. And I see that most times I end every day in profit. So it's not just the strategy that might be wrong, it might be your trading plan that you need to, review. And that's it. So for your homework, I dropped something. I said I want you to identify a setup that meets all your strategy rules. This time around, remember in our previous lesson, all your homework has not involved you entering a trade. It's just you marking and marking and marking on your trading view app. But this time around, I want you to execute that trade with your full confidence. You don't want to guess. Even if it is a loss, no problem. Now, I want you to also write down why you took that trade, how you felt before and after you took that trade, and what you've learned after that trade outcome has happened. Now, take note, you are not just taking a trade randomly. Make sure that that trade meet up all what you've been learning from the lesson 1 to this particular lesson. Then after doing that, you want to share your chart and your trade with me in my DM and caption it with lesson 4. Mindset is my new edge. So when you do that, then I can now look that yes, you are progressing in the lesson. So that's what we want to discuss in this lesson, and I will see you in the next. I think what we are going to be discussing in lesson 5 will be more of okay, just give me a few minutes, let me check. Okay, lesson 5 will be talking about more on journaling and tracking your trade, how you want to trade smart and learn faster. So see you in the next video.